Buy when there's blood in the streets, even if it's your own blood. That is what Baron Rothschild, one of the greatest financiers of the 19th century, put it. And that's exactly what I'm doing. Throughout the history of bull markets, every major run has been filled with pullbacks, corrections, mini crashes, whatever you want to call them. And each dip shakes out what is called the weak hands and opens the door for those ready to take and seize the opportunity themselves in the strongest projects before the market pumps higher, because it always does. And that's exactly what we're getting into today. First, the first part of today's video is going to be a quick update on the 5 legacy layer 1 blockchains that continue to dominate the market. Then the second block or half of today's video will explore something perhaps a little bit more degen or risque. We're going to go over the 4 most promising new, and let me emphasize that word, new layer 1 blockchains of this cycle, projects with a kind of momentum, narrative, partnerships that could potentially make them the next big winners this bull run. And if you were to buy into them, invest into them, it could hypothetically represent a huge opportunity for you to multiply your initial investment money. Now, I do have to emphasize these are highly risque, high risk bets. So let us get into it. And I share them with you, even though you know my general nature and profile as an investor and as an educator is highly conservative and a highly honest, full disclosure one, where I always try to share with you all the pros and the cons. And the reason I'm going to share these 4 high risk layer 1 investment opportunities and projects with you towards the end of the video is because you need to be informed. Okay, you need to know the opportunities out there, and then I will tell you what needs to be answered or what warrants more of your research as I get into them. Anyway, let's start with Ethereum. Ethereum launched in 2015, and in just a decade, it has grown into the backbone of the entire crypto economy. It is the chain where the deepest liquidity flows and where the largest builders continue to plant their flags. Spot ETH ETFs are now piling in historic inflows. At the end of August, for instance, we saw back-to-back records, $444 million of new inflows in one day. Then $455 million the next day. And on some days, Ethereum ETFs are even matching or surpassing Bitcoin ETF inflows, showing just how strong institutional appetite for ETH has become. One of the loudest advocates is Tom Lee, co-founder of Fundstrat Global Advisors and a highly respected Wall Street strategist. He has become a vocal champion for Ethereum, positioning it as deeply undervalued and ready for a major repricing. Corporate treasuries are also beginning to accumulate. Bitmine Immersion Technologies disclosed it holds over 2.4 million Ethereum, more than 2% of the entire supply on its balance sheet. That's one of the largest single corporate allocations to ETH we have ever seen. Ethereum also remains the gravitational center for stablecoins, with about 161 billion in supply issued on its rails. This dominance in dollar-backed liquidity makes Ethereum indispensable for global settlements. And the builders keep coming because of this certainty, from JP Morgan and Citi's tokenized pilots to BlackRock's Build Fund. Some of the largest institutions in the world are choosing Ethereum as their launchpad. Alongside that, the layer 2 ecosystem, Arbitrum, Optimism, and Base, continue to expand Ethereum's reach even further. So when you put it all together, Ethereum is still the most proven settlement layer in digital assets. However, while Ethereum dominates the institutional game, another chain is exploding with retail energy, from memes to millions of users. Let's talk about Solana. Now, Solana launched launched in 2020 and has become known as the chain of the people. It went through one of the toughest trials in crypto history with the collapse of FTX in 2022, if you were around. And for those of you who were or were not, just a quick recap, FTX was one of the largest crypto exchanges in the world. And when it went bankrupt, billions in customer funds were lost. Solana was deeply tied to that ecosystem, and its price fell from around $200 a coin. Think about that, to $8. Many believed the chain would never recover. Instead, it came roaring back. And today it stands as one of the fastest growing blockchains in the world. The numbers, frankly, tell the story. Solana recently hit a new all-time high in total value locked, crossing $12 billion. Daily active addresses consistently remain 2 million. And we know the meme coin narrative is onboarding millions of retail users. Platforms like Pump.Fun are generating over $1 billion in daily volume, while tokens like Bonk have made Solana the most exciting playground for cultural coins. And on the institutional side, institutions are paying close attention as well. Multiple firms, including VanEck and 21 Shares, have filed for a Solana ETF, with updated submissions under review at the SEC right now. And one unique feature is that a Solana ETF may indeed include staking yields, which would really set it apart from Bitcoin and Ethereum products. And we see treasuries are joining in too. Decentralized autonomous treasuries, or DATs, are beginning to allocate into Solana, treating it as a long-term balance sheet. And just like Ethereum has Tom Lee, Solana has its own champion, Kyle Samani, co-founder of Multicoin Capital, who has become one of the most vocal and unapologetic advocates for Solana's future. Solana now sits at the intersection of mass retail culture and institutional adoption, a powerful combination heading into the next stage of the cycle. And while Solana is proving itself as a retail and meme magnet, another chain is stepping up as the breakout newcomer of this cycle with a completely different model of execution. Let's talk about my personal favorite, drumroll please, Sui. Now, for those of you who don't know, or maybe if you do, what is so remarkable and interesting about Sui are a few things. Mainly that it launched in 2023 with a completely different model of execution. We know their team comes from Facebook or Meta's original tech team behind, I believe it was Diem or Libra, the one that Congress crushed. Remember, they took Mark Zuckerberg to Congress and they questioned him because he was going to create a way of integrating payments seamlessly into Facebook at the time so that anyone in the world could buy stuff directly through Facebook. Well, Congress rushed that. And when they did, that tech team split into Sui and Aptos. Okay, I could do a video on Aptos if you want. Let me know. I believe primarily the business side of this DM Libra team went to Aptos and the techie team went to Sui. Anyway, let me know if you want me to do a video on Aptos. As of now, this is what you should know. The team is brilliant. And what they did, okay, is instead of treating transactions like a long line waiting to be processed, I made a whole video on this. You can check it out here, or I'll share it at the end of today's video. What Sui did instead is they introduced an object-based design that allows many transactions to run in parallel at the same time, like a highway where multiple cars can run on multiple lanes. And the result was faster throughput, lower fees, and an experience ultimately designed for the user for the next generation of gaming, finance, and consumer apps. And the momentum is truly undeniable. As I said, they are relatively new. They only came about in 2023. Yet, Sui's TVL is now around 1.7 billion, with another 2 billion bridged in, and daily DEX volume is close to $450 million. Even their fees, which show whether users are actually paying to transact, have surged more than six-fold year to year, which is a clear sign of real demand. The ecosystem is expanding too. DeFi protocols like SuiLand, Navi, and Hodl are pulling in liquidity while perpetuals trading on Bluefin has exploded as well. Sui is also stepping into one of the most promising narratives of the cycle, AI agents, which we know is the future, as frightening as it may seem. It was recently announced as a launch partner with Google for the new agentic payments protocol called AP2, a system that allows artificial intelligent agents to move money and make payments on behalf of their users. This is a major development, and I think we can all clearly see this is the future. And Google is helping set the standard for how AI will handle real-world commerce. And Sui is one of the very first blockchains chosen to power it by bringing fast, programmable payments and privacy-first identity. Sui is positioning itself at the center of the coming agentic commerce economy. And in just 2 years, Sui has grown from launch to billions in liquidity, hundreds of thousands of daily users, and a partnership with global giants like Google. It has established itself as the breakout performer of this cycle. The chain proving that designs can stand alongside the legacy leaders. And while Sui is racing up the charts, as we see, as the new top contender, another veteran chain deserves a spotlight because it remains one of the most widely used in the world, thanks in many ways to its deep ties with the largest exchange in crypto. Let's talk about BNB Chain. Now, just as a quick recap of BNB and its origins as well, BNB Chain launched in 2020, and it has since then grown into one of the most widely used blockchains in the entire world. Its deep connection to Binance, the largest exchange in crypto, gives BNB an unmatched distribution network and direct access to millions of users. Their activity numbers are actually quite staggering. BNB Chain records more than 2.6 million daily active addresses, consistently ranking at the top of all blockchains by usage. And over the past week, decentralized exchanges on BNB processed more than 25 billion in trading volume, a level that only Ethereum and Solana can rival. And BNB continues to upgrade rapidly. In 2025, it rolled out a major performance improvement that reduced block times to 750 milliseconds and introduced optimizations against MEV, which is the extra profit validators capture by reordering transactions. And this allowed them to boost their throughput to 100 million gas per second. These changes make the chain faster, cheaper, and more reliable for the massive user base it already commands. And corporate treasuries are also stepping in with BNB. We see Nasdaq listed CEA Industries bought 200,000 BNB worth $160 million, becoming the largest corporate BNB holder after securing a 500 million private placement to pilot its treasury strategy exclusive to BNB. That move signals strong confidence in BNB's long-term role. And BNB's history further proves its staying power. It went parabolic during the last bull market, and even after years of competition, it remains one of the top chains by market cap, TVL, and user activity. With its synergy to Binance, massive daily usage, and now corporate treasury adoption, BNB stands out as one of the most durable networks in crypto. And while BNB's strength comes from its distribution and scale, another chain is carving its niche by focusing on flexibility, letting anyone spin up their own custom blockchain in minutes. Let's talk about Avalanche. Now, Avalanche also launched in 2020 and quickly has set itself apart with a simple but powerful idea. That is, instead of forcing every application, every dApp or app to share the same blockchain, Avalanche allows anyone to spin up their own custom subnet, their own chain, while still connecting back to the broader network. This year, for instance, Avalanche leveled up with the Avalanche 9000 upgrade. The overhaul slashed the cost of launching subnets by about 99.9%, almost 100% cheaper. And it cut C-chain gas fees by 96% and pushed throughput to new highs. This makes Avalanche one of the easiest platforms to deploy purpose-built blockchains, whether for DeFi, gaming, or real-world asset applications. And the ecosystem, okay, the community and the applications building on Avalanche shows the results. Avalanche's TVL has more than doubled over the past 6 months as new subnets and applications have gone live. That growth signals renewed developer and user confidence. And on the institutional side, Avalanche is becoming a leader in tokenized and Treasury adoption. Firms like JP Morgan, Citi, and WisdomTree have all run tokenization pilots on Avalanche, exploring everything from tokenized deposits to on-chain funds. And it's not just pilots anymore. The first corporate treasury has arrived. AgriForce Growing Systems, a Nasdaq-listed company, announced it will rebrand as AVAX One and raise about $550 million to buy and hold AVAX. So this marks the first Nasdaq-listed firm to launch a dedicated Avalanche treasury strategy. Avalanche's combination of customized infrastructure, ecosystem momentum, and now corporate treasury adoption makes it one of the most flexible, future-ready networks in crypto. And while Avalanche shows how the old guard is still innovating, there's another side of the story. We've now covered the 5 legacy chains and how what they've achieved is remarkable. Every cycle, dozens of new blockchains claim to be the next Ethereum or the next Solana, but very few survive long enough to prove it. So as I get into these next layer ones, okay, remember that what I share with you has yet to be proven and tested. However, if you have been here through past bull runs, you would know that narratives in themselves can pump a token, can make it fly for some time. All right. So that said, as you listen to what I have to share with you next, keep in mind and think of it as gambling, like straight up money that if you were to invest into these tokens for the time being, even though these next layer ones may prove themselves to be real, to be the next Sui, to be the next Solana, we have yet to determine that. So as of now, I'm not questioning them like intrinsically because I'd have to be part of their team to know this, right? And I'd have to know the future. But as of now, they're highly, highly volatile, high risk, and potentially high reward. Okay. Not to mention the fact that as crypto adoption keeps expanding, more countries, corporations buying ETFs, buying, like creating funds for Bitcoin and Ethereum and now Solana, et cetera, et cetera, et cetera, and Avalanche, there will be a ripple effect, which is like marketing, right? It sends a message. More and more people are reading and hearing about this. So this has a flywheel effect and draws in more people, more money, therefore, and brings attention. And that's why, as this new money flows into the crypto ecosystem, we have to keep our eyes open because there will be new opportunities emerging. And it will be my job and honor and pleasure to bring these opportunities to you, always sharing the pros and the cons. So you have the information you need to go do your own research and stay very safe. So let's kick off with Memecore. Memecore is something entirely new in this space. It's the first blockchain designed specifically for what they call Meme 2.0. The vision is simple but powerful. Take memes, which usually burn bright for a few weeks and then disappear, and turn them into long-term cultural and economic engines. So instead of just being short-lived tokens, memes can evolve into sustainable ecosystems with apps, revenue, and community ownership built directly into the chain. They are putting real firepower behind that vision. DWF Labs, one of the most active investors in crypto, has already backed Memecore and is helping to scale the ecosystem. And at the same time, the Memecore Foundation announced a token buyback program funded by revenues from dApps running on the chain. So it has a buyback mechanism which ultimately secures the price. They call it the Memecore Flywheel, which is growth fuels buybacks, buybacks strengthen the token, as I said, and that strength attracts even more people, more growth. And the timing, honestly, is quite ideal. Meme coins have become one of the strongest cultural forces in crypto. We've watched them dominate Solana with Bonk, Dog with Hat, Pump.fun, pulling in millions of users. Memecore is aiming to capture that same raw energy, but at the base layer itself, building the rails instead of just the tokens. And right now, if we look at some metrics, Memecore's market cap is about $2.7 billion. As a reference, if it grows to Solana's current market cap, which I would not necessarily compare it to because the use cases are very different. But anyway, just as like a general comparable, if it were to grow substantially up to like say Solana's market cap, that would be about a 44x move. Memecore is taking one of the most viral forces in all of crypto, that is internet memes, and the communities they really represent, and giving it infrastructure, buybacks, and strong institutional backing. And if memes continue to be the onboarding ramp, okay, the introduction for new people to enter into crypto, Memecore wants to be the chain where they land. And while Memecore is all about culture and memes, the next project takes us into an entirely different world, the $80 trillion intellectual property economy. Let's talk about Story Protocol. Now, Story Protocol launched in 2025 with one of the most ambitious missions in crypto, that is to build a blockchain for the $80 trillion intellectual property economy. Its vision is to make IP programmable, so creators, companies, and even AI models can register their work on chain, license it, and collect royalties automatically in real time. And I think all of us who were here last bull run thought NFTs was the beginning of all of this. So it's really interesting and nice to see that Story Protocol is taking up this feat, right? This vision. Now, whether or not they will succeed, I don't know, but let's get into more information. So we know that their idea and their vision is massive, but we also find out that they are backed by some serious capital. Story has raised $136 million from some of the biggest names in venture capital, including A16Z, Polychain Capital, and Samsung Ventures. These are the same investors who have backed global leaders like Coinbase and OpenSea. So their involvement signals how serious the market is taking Story's vision. And earlier this year, Story officially launched its mainnet, positioning itself as the default settlement layer for creative rights, digital assets, and even tokenized real-world IP. One example of adoption is the Sol Exchange, one of just 2 licensed platforms for unlisted securities in South Korea. Love kimchi, which announced it will use Story to settle tokenized real-world assets. Moves like this show how Story is aligning with regulated markets and plugging directly into the infrastructure of global finance and entertainment. And right now, Story sits at a market cap of about $4.25 billion. As a reference, if it grows to Solana's market cap, which once again, it's not comparing apples to apples, but we are talking about IP. So it's a massive market that does have the potential to run incredibly so. That said, if it runs up to Solana's market cap as a baseline, okay, that would be about a 28 multiple, 28x move. And Story Protocol is still young, but it's building at the intersection of some of the biggest narratives, crypto, AI, and media. So by putting intellectual property directly on chain, it's aiming to unlock a market worth tens of trillions of dollars and give creators, companies, and investors a new foundation to build on. Welcome to Web3, guys. Shifting gears a bit, while Story is all about IP, rise, and royalties, the next project focuses on something entirely different, powering the machine economy, where robots, vehicles, and devices become their own economic agents. Sounds a little bit like Sui, but let's talk about peaq. peaq launched in 2021 with a vision to build the blockchain for the machine world. Now, keep in mind, just a quick note, being that they launched in 2021 when the bull market was fizzling out, that to me in itself is such a beautiful indicator of resilience and the fact that they're very likely building something real and solid, because a lot of crypto projects just stopped. Bull runs over, there's no easy money flying around. They just quit. They gave up on their tokens. So the fact that peaq kept building to me is beautiful and a very, very good signal. Anyway, peaq's vision is to build the blockchain for the machine economy. Their goal is to enable cars, robots, and devices to participate in the economy on their own, paying for services, earning income, and interacting as independent agents. So imagine an electric vehicle paying for its own charging, or a drone settling a toll mid-flight. That's the kind of future peaq envisions and is working towards. Their partnership backing is impressive. peaq recently announced a deepen enterprise adoption program with Bosch, B-O-S-C-H, one of the largest engineering and technology firms in the world, Lufthansa as well, one of Europe's biggest airlines, and others. And we know having companies of that scale test peaq's technology shows how significant this opportunity could become. The market backdrop is impressive, as you saw. The robotics and the IoT sectors are projected to grow into the multi-trillion-dollar range this decade. And peaq aims to be the default infrastructure layer, giving every machine a wallet and identity and the ability to transact. Now, mind you, we have yet to see, and it would be very good if they included some identity security layer to make sure the agents don't go rogue and that it's attached to a person. We have yet to see. As I said, I'm just sharing my research with you so you can go and do more research. And if you ever want me to do a deep dive, let me know. I may do it once I do my research and I find out they have real good legs to stand on. Or maybe just as a sequel to this video, now that I shared I've shared these projects with you, I will circle around and cover them in future shows so you can keep up with their potential and opportunity. Anyway, right now, peaq's market cap is at about $139 million. And as a reference, if it grows to Solana's market cap, that would be about an 158 multiple move. Unbelievable. Probably the biggest upside potential from all the projects I've shared with you in the new category. Anyway, this multiple shows the scale of what's on the table and the projected market revenue for this new niche that's popping up in the market, and how these really smart, sophisticated investor, analytics teams are projecting this new sector to be valued at. So peaq is positioning itself as the chain, powering the next wave of connected machines, vehicles, and devices, which, as I said, not to keep reiterating on this, but the opportunity is truly enormous here. We know that this next industrial era, I believe we are going through a new sort of industrial revolution. It's the tech AI one and Web3 with crypto and Bitcoin leading the way there. This sector is very much so at the forefront of this revolution era we are going into. So it's absolutely enormous. So while peaq is building the rails for robots and vehicles, the final project we're going to cover today is tackling another frontier. Of course it is. Financial settlement at an unprecedented speed. It's trying to rival Sui, which I love. So we'll have to do a very detailed deep dive on them and follow them closely to see what's up. So let's talk about Keeta. That's Keeta. Keeta also launched this year with the ambition to redefine how blockchains handle scale and settlement. Their goal is to become a universal payment and settlement network that can connect across chains and financial systems while operating at a speed that rivals traditional infrastructure, and their performance claims are very bold. But as I say this, I will preface it by saying it is primarily at the moment to be unproven. They've done very mild testing, and their claims are mainly that. Their goals and white paper. Yeah, their white paper goals. Okay, and they've been mildly tested. So we have yet to see. But let's listen to what they have to say. Keeta, as of now, says it can process 10 million transactions per second with finality around 400 milliseconds. But as I said, I did a lot more research on this and have found that it is yet to be proven. These are primarily claims right now, and it needs to be further stress tested. Anyway, if validated in the real world, this level of capacity could place it far ahead of today's leading blockchains and make it a contender for enterprise-grade financial systems after they run successfully for some time. I would say if they can make it through this next bull run and they survive hacks and all of these, marketplace stress testers, then they could be a serious contender for enterprise-grade financial systems. But until then, these are claims, guys, but worth you taking a look and doing some research. And what is impressive of Keeta is their team and their backers. Eric Schmidt, the former CEO of Google, is one of its key investors, and the project has secured about 20 million in funding to advance its development, and its mainnet has already launched. So with Schmidt's involvement and a live network, Keeta is positioning itself as a settlement layer that traditional institutions can take seriously. Right now, Keeta's market cap is around 452 million. And Mania, compare Keeta to Sui as a reference. So if it were to compare and grow to Sui's market cap of about 12 billion, that would represent roughly a 26 multiple 26x move from where it is right now. Now, Keeta combines bold technical ambition. I say ambition loud and clear here because it has yet to be stress tested, okay? But it combines this technical ambition of unparalleled speed with the credibility of world-class backers. So if it can prove itself through real world conditions, as I said, and secure adoption from large scale partners, it would become a foundational layer in global settlement. So with Keeta, personally, if you're going to approach it, I would do it very, very cautiously and with money that you're okay never seeing back, because their claims are enormous, which as a marketer, I don't want to say I take it as a red flag, but I take it as hype. And what do you do with a lot of hype? You identify it as hype, and it kind of tells you like, wow, this team, they have a lot of nerve. And sure, the CEO comes from Google, but I looked into their tech team and I have to do some more research. So let me know if you want me to do a full deep dive on Keeta, their team, their tech team, who's leading it, if they have the Web3 technical prowess, because I understand they have the Web2 technical prowess, but I have yet to see that they have the Web3 prowess, and they have yet to prove security, as I said. They have yet to prove decentralization, because as of now, I believe they're going to be using Google's network, like cloud network, which is not decentralized. So we have yet to see that part. So let me know if you want me to do a deep dive on Keeta, but from a high level, here you have it. These are the potential upcoming contenders. Go do your own research. So, okay, guys, that brings us to the end of today's video. Today, we walked through 5 legacy chains: Ethereum, Solana, Sui, BNB, and AVAX. These projects are battle tested. The only one I'm not holding is Avalanche, mainly because even though they enable, new creators, new founders to spin up their own chain, and there is a use case for that, I think it sort of like disperses community instead of bringing them together. I don't know. Personal take on tokens I'm holding. Okay. If you love Avalanche, I can see why they have a use case, but for me, I'm not holding AVAX, just letting you know. Anyway, as I was saying, these projects have been stress tested. They have gone through bull runs, bear markets, hacks, etc. So these are the ones that I am confident on. Now, who will outperform whom in the long run? That's going to depend on partnerships and their ability to innovate and keep up. And resilience is their biggest advantage. On the other hand, when we looked at our 4 new incoming contenders, we see that Memecore is giving memes real infrastructure with buybacks and investor backing. Now, personally, I'm not the biggest fan of memes. I understand their use case. I understand it's like a mascot for a team. It rallies people, it brings people together. It creates culture, a sense of community. I get it. Okay, that's a separate video I'm preparing for you guys, which is how to identify a good meme coin. However, meme coins, the reason I'm not the most excited with Memecore is because, I don't know, we'll have to see how it pans out, but it's bringing a technical side to something that most people just see as fun, right? So we'll have to see how it pans out. And maybe I need to go do more research as well to see, like, you know, what they're building, go check out the community, get a feel for what's on their roadmap. So I will get back to you with some updates on Memecore as the bull market progresses. But as of now, I'm not the biggest fan of Memecore, just to let you know. Next, we went into Story Protocol, which is targeting the $8 trillion IP market. Some of the strongest VCs in the world behind it, which to me is an incredibly strong bullish signal because these serious people have serious money and they're putting their serious reputations on the line. So that says to me a lot of due diligence was done. Now it is going to come down to execution and potential competitors coming up and using all of their, you know, leveraging what Story Protocol built out and doing it better and faster. We'll see. It always comes down to execution. So, and marketing and partnerships and user acquisition. So we'll have to see what their business development team can do to make this project successful. But as of now, it has really good legs, standing strong VC. So I am bullish on it. Next, we looked into peaq, which is building the rails for the machine economy. I have nothing to say here. We know this is the future. And they're already working with global brands like Bosch and others. So they're standing on really solid foundation, have really solid backing. They're building into the future niche of the world, which is, you know, agents and robots all transacting in the internet. So to me, I feel like that's a solid project. I'll do some more research before I put any money behind them, but sharing the opportunity with you once again. And then lastly, we saw Keeta, backed by former CEO Eric Schmidt. We have yet to find out if their claims, which are very, very big, pan out. So as of now, I take their claims as marketing hype. I mean, no hate to the team, but we'll have to really see. I'll do a deep dive to find out more about their tech team, their crypto side, and find out more. And I'll share with you what I learned. Anyway, guys, here on this channel, we always walk the extra mile to bring you the top projects before they go mainstream. So if you found today's video valuable, then make sure to like the video and subscribe and turn on your notification bell so you don't miss my next videos, because we're going to get into a lot more bull run preparatory type videos. Also going to be covering top wallets coming up soon, which ones require KYC, which don't, cost, ease of use, etc. Wallet video, how to prepare and invest in meme coins, and much, much more. We're also going to get into walrus. So anyway, love you guys very much, and I'll catch you in my video tomorrow. Ciao.